Afternoon, good evening, wherever you are in the world today. I hope you're absolutely amazing. So, I'm going to have a quick chat about what we spoke of yesterday. These are my blue light glasses, I'm going to wear them. And the danger zone or the kill zone, I like to call it, because I think kill zone has more of an impact. It's more emotionally stimulating than danger zone. I think danger zone is a bit more associated with Top Gun back in the 80s. So, kill zone. Let's keep it kill zone for now. But if you need to tone it down, call it danger zone. The price we saw yesterday was a little bit further back when I put this GAN tool down. And I said not to open up a trade when price is inside that area. Okay, you know exactly what I'm talking about, don't you? It's this area right there, behind this red line. Okay. And the reason I said not to open up a trade there is because there can be turning points that crumble, and it gets quite frustrating for traders who are looking to open up a trade because they got outside pressures. Maybe guys want to just make profit for the sake of making profit, but generally the pro guys need to pay bills, prove their performance, that kind of stuff. So a lot of people will try to get into a trade so that they've got the money working for them. Now, again, I've noticed enough times in my past that opening up a trade within this or behind that red line, within this area over here, is high risk, because at times the market might just want to do a closing move on the transition, or it's just not really ready, even though it looks ripe, even though it looks like it's trying to hint to the upside. For example, it's elections day today in the US. Not sure if the results are going to be out in the next 12 to 24 hours, so we'll see what happens with the market over there. However, a lot of guys are probably feeling that anticipation and that hype and that angst and that excitement, and wanting to get into a trade. Thankfully, because of this kill zone, it's best not to rush the market until the market is ready. Despite your emotions, despite your personal circumstances, you wait until the market is ready. And how you know the market is ready, typically, especially on the higher frames, it's more sturdy and stable. Lower frames, a bit more sporadic, but on the higher frames, we wait for the price to exit this area over here. Just by the way, this terminology is completely unique to me. There is no one else that speaks in this way, and no one else that has brought this topic up, because I don't think there's anyone else who's gone this far in understanding the metaphysics of a market and how to listen and react and work with the market despite ourselves, which is obviously impatience and that kind of stuff, with the human element involved with how markets truly operate. So it's a bit of it's like an art and a science that bounces back between the two. So this post is mostly just to show you why it was a good idea not to go long as yet, even though today is what today is, and you know what today is. Finally, right? I think a lot of people just want this election behind them. You know what I mean? And why it's best in live market conditions. Again, the information that I share with you is in live market conditions. A lot of courses on Udemy will talk about certain geographical patterns and if then that, and wait for this, and there's like this, like they zoom into the three candles beside each other and go, oh, this is called the three little birds, and you got to do, it's like a whole bunch of rubbish out there. The education I'm offering you for free, by the way, and these market updates is specific to live market conditions in real time, out there in the wild of dealing with the markets. Okay, I can't make this stuff up. It's relevant. It's in the now moment. And again, it's backed by my strategy over and over and over. So I want to see if I still have it open from yesterday. No, I closed it off because I need to free up some RAM. You won't believe how much RAM training AI models takes on your laptop. Anyway, so what should we do now? I've got some time left. I might actually set up another post later after some market action has kicked in. But for the time being, for those who want to see what happens in the near future, I would say let's look at where this is forming inside. Actually, let me bring it up rather instead of free wheel. I need to take that away. Oh no. All right, bad news, guys. I can't actually move the strategy onto the screen because I've gone full screen for neatness over here. But if I had to change this, TradingView is going to not allow this post to get up online. So what I'll do is maybe do a post later and just show you why I think this is a turning point. Typically, it's all the reasons, unless you want me to read it out. So we've got here trend direction. It's in trend. Turning point spacing, looking good in terms of where it's forming. Scaling we can get into right now. I think the scaling is going to be very interesting depending on when the results are released. So just on scaling alone on this, I'm thumb sucking or assuming that we're not going to get the results in the immediate future. My brain started to it sounded like a car trying to rev there. All right, so kill zone, we're still not outside of kill zone on the higher frame, so I would avoid that. Time projection, let's quickly lay that down. Assuming that this is a confirmed turning point, and again, I'm not entirely sure that there won't be wild swings once the election information is released, because the ignorance kind of throws the markets around. And so it's best to wait for the initial impulse rush before committing to a position, I think. Unless you want to kind of get in now and just let it ride up to you. All right, so from a time aspect, I'm going to just leave that as it is. I'm going to leave cube root for now, as you guys can't really see the details, so maybe I'll run this again later on. It actually says option 2. You can't see it, I'm sorry, but it says option 2 is 32. So we've got a double confirmation for this area over there. And alrighty. The oscillator is switched in up, which is good. Price projection, I think our scaling is correct. So if we're going to see a counter trend move, all right, so this low is lower than that low, the high is lower than that high. So we've got a downtrend over here. So if we've got a counter trend move and we get the election results within the next 24 hours, then I think price should break up here. If we don't get the election results in the near future, I think the market's just going to wait and wait and wait and do some more consolidation and to crawl across. And then once that has been released, that's when the volume is going to come through. And then just from a time price, I set this up here because that's the current high. So if we're going to have a trend directional change as it's indicating in this area, then I think the next location is going to be up there. The other thing, though, if you guys are looking to do the leap competition, is mine open yet? When you connect to it, just by the way, you go down to the corner. Oh no. Oh, cramp. Internet connection problems. I'm getting it upgraded today because I can't endure other people's failures when it comes to technology. We're in 2024 and we're still dealing with unnecessary headaches. Can you actually get your head around that? So yeah, hopefully in the near future, I'm going to have fiber installed instead of relying on overly priced Wi-Fi that connects to a whole bunch of fancy things, but really doesn't remain stable. And that's going to be upgraded soon. The final point I'm trying to make, if this kind of decides to work, is that if you're connecting to paper trading for the leap competition, then make sure that you're connecting to where it says competition. So over here, it's got to have competition next to it. I made the mistake last time. I clocked in over $1 million in profits only to realize that I was under paper trading and not in the competition. And I felt pretty stupid for that because a lot of time, effort, and energy was wasted unnecessarily. The other thing I want to let you know is that when you open up a position, you got to use the Coinbase spot chart. So over here, I'm going to go and just say buy. And then it's going to say you can't open it because you have to change your market to BTC USD. So when you click on that, it'll take you to the Coinbase one, which kind of sucks because you have to put all your tools on there and build it up from scratch. It's the kind of the reason why I haven't done it just yet, because I'm a little bit lazy like that. And just in case you wanted to enter the competition and trade along, everything here that you need is kind of written out. So the maximum open position for Bitcoin is 0.25 of a Bitcoin. SAP, silver, gold, silver, Forex. I think this is oil. And that's obviously Ethereum. So the max position size are there. I'm obviously going to play with Mac or trade with Mac positions. And then the specific charts that they are using and registering are listed over here. So don't have everything built up on a chart that's not going to be registered over here. Put all your tools and everything onto their registered charts so you can actually work with and trade off of there. And as you can see at the bottom, we've got I'm used to leverage, so the spot stuff is really painstakingly slow and I can't stand the numbers. I've put in a 0.25, so that's a quarter of a Bitcoin into this trade. Simulated stuff. There's my stop loss, and I'm up $8. So that's the difference between spot and leverage trading. In case you haven't crossed over to leverage trading, you can go much bigger, and these numbers accrue a lot faster. But I suppose the terms and conditions, the small print there is that you should be at a level of skill set to win more than you lose, and have something like a system like this to support you, to have your back on the downside, to also take care of you on the upside as well. So that you don't lose a lot fast as well, because as much as you can win, and as fast as you can win, is equally as how fast you can lose. It's actually more. I was going to ramble a little bit. If you want to just if you've listened this far, you might as well just keep on going. It's because of the cost of opening up a margin trade, as well as the fees involved and kind of the borrowing for the money to leverage trade. That's quite expensive. They've made it quite expensive. It's like 2% or something, which is a lot of money if you look at the amount of the size of the trades that are going in. This is for margin trading. And so what I was trying to get to is that as easy as it is to use big numbers to win, is as easy as it is for those big numbers to dissolve into loss. Okay, but they're not equal. It's actually favored to loss, because as soon as you open up a margin leverage position, you're immediately on your in loss, because they charge you for the opening of a trade and for being able to utilize leveraged money from wherever it comes from, if it's independence or the exchange itself, there's a cost to everything. There's a cost to all convenience. The way you can save money for it to be kind of equal to lose, equal to win sort of thing, just from the fees perspective, is open up a pending or limited order. If this is going over your head, then just write down the names and then use ChatGPT to further explain it to you. I would say Google, but Google is dead. Since ChatGPT has got search function, why does Google exist? I don't know. Not for much longer in comparison to the major wave, in my opinion, but that's a different discussion. So, just GPT, the difference between a market order and a limited order or a pending order. It's got both names, and you'll see there that when you do a limit order, it will go in at a certain price. Your order for 0.25 Bitcoin, for this example, will be waiting in the order book to go in at a certain set price, and then if price goes down there and your order gets filled, there's two variables there, then you'll benefit from low fees and all that. But for me, I pay the convenience, and also if you don't leverage, if it's just spot, then I think the fees are like little to nothing. All right, so there is ways not to waste money on fees if you kind of are the person who is patient enough and willing to take on the risk of price actually not going that low, and also price, even if it goes that low, will there be enough orders to fulfill the amount that you put into that order? In case this is overwhelming, don't get rattled. But if this is kind of like just a reminder as to which way to go, then I'm sure you nod your head and you agree as to my logic. So for me, with these wicks and so on, it's just coming from experience, and this is all coming from experience and frustration and annoyance. So I hope you guys are taking value from this, because this is quality being shared with you of what it's like in the real world. And a frustrating thing that can happen where my mouse is over here is that, say, for example, just for argument's sake, easy math, you've got a 1 Bitcoin order at 67,000. And let's say the price comes down to 66,782, but it just flashes there. Bye-bye. And your order doesn't get filled completely. Let's say, for example, 0.25 of your order, 25% of your Bitcoins of the order gets filled, but not the full order. That means your full order isn't opened up as a position, as it's waiting to get the rest of the rest of your order fulfilled. And effectively, you've waited all this time just to get into a position, potentially missing out on the position because it wasn't filled. And should you be right, which is quite difficult for most people anyway, when price goes up, you're going to sit there so agitated because your order wasn't filled, and you were right overall, and then that perfect entry doesn't get you the maximum order that a lot of like idealists are after. I don't care about all of that stuff. I'd rather pay personally for the higher fees for the market order, as well as the leveraged fees to utilize OPM, other people's money, and then just kind of ride the transitions in the direction they want to flow. And again, like, I don't need to get into for those reasons, because market order, I'm sure I'm going to be in the markets, sure my position is going to get open, and also OPM using other people's money. I don't need to get the perfect spot position. I can wait until a kill zone has been cleared or price is outside of this risky area and has nominated a travel line along one of these fan lines. And even if I get in late and ride it to around about there, even if I just do that part of the journey, I'm making a crap ton more than a spot trader who is setting up a pending position over here and maybe doing the same thing. Leverage trading, market order. That's your, on top of everything else, takeaway for the day. Ciao.